All right, so we got that one more day of consolidation. In the morning, we got up to about 270, 280, failed, came back into 270 into the close. We zoom out, you can kind of see what this looks like. We had that very hard down move after the Fed notes. But again, right yesterday, right back inside of this consolidation. We don't necessarily, I know I probably mentioned a couple of days ago, it could break on Friday. Doesn't necessarily have to happen today. We could get another day or 2 or 3 days, just continued movement in this area here. But the longer we're here, the better in terms of the strength of the next move. I read a statistic this morning that if we close 4 days in a row in the bottom 20% of a range in the SPY, it actually was bullish over the next few days. I put in the notes in the top of the game plan that the way you want to judge things today is with the gap up. If you notice us holding above 272 and then we break to the upside, you want to be more mindful that this could be the day that we break up. But we do have, 270, 280, 273 where we topped out yesterday would be the first spot where there could be some trouble. The next spot would be 273, 40-ish. On the downside, yesterday when I got short on the open on the SPYs right here on this wick, we came back down very quickly to below 271 and held. So I would look for the same thing this morning. If we fail above here 272, we have a quick wick down below 271 there. See if things tighten up. IWM side. Okay, so I haven't changed anything that I drew. This is from yesterday's morning meeting. So let's see, how did the market behave based on what we already knew from the prior few days? I always love these as an example. So we drew these in place as, kind of the support areas, resistance areas over the last few trading days. And then yesterday happens. What does it do? It goes up to the top resistance area. You have a little wick here, comes inside, holds, reverses back down. Where does it bottom? Near the top of this support range. And so it's also in its own consolidation very clearly. 1, 2, 3, 4 days as well. And same thing on this one. If it gets below, I think it's the 150, 185 I've highlighted the last couple of days and starts to hold below there, breaks to the downside. This is the next support area. If it gets into this resistance zone, into 150, 360 to 150, 380, consolidates there and breaks to the upside, we want to see if it goes back up to the high from Wednesday. All right, so a few things in play today. I'm going to start with HP. This was the enterprise that was spun off from Hewlett Packard a few years ago. Here's the, so you can see since they spun it off, it was like a $10 stock, fell down, and then Mexico just reported their GDP, 0.8%. So it's been moving higher, a pretty long consolidation period between 15 and 13 over 2016 and 2017. It broke above that, did the retest of it probably on the day the market sold off or bottomed. And now with the very strong numbers, what were the numbers? Oh yeah, so they crushed the EPS. I thought maybe there was some tax from, I don't know, some sort of one-time benefits in there. But the main thing is you can see the revenue beat by 10%, and then they guided higher on revenue. So the business is doing well. So it's hard for me to imagine that it would, if it comes in, it's going to do more than come into close to 17. I don't see why this would gap fill based on everything. I haven't spent a lot of time looking at it, but just looking at the numbers now, it's double topped in the pre-market. I'm sorry, it topped out here in the after hours, and in the pre-market, it's holding below 1860. So I use these levels from in the after hours. It ran up to 1950, and it made a lower high a little bit below 19. So I put that in there. But from our perspective, coming in this morning, it is holding below 1860 now. Looking for support 17 all the way down here. Norman does 12 million shares. It's already done 500,000. I guess my first thought is I'm going to look for a flush below 18, and then see if it starts to hold back above $18, gets above 18.20. I would play it for a move to here, and then kind of see, do the buyers keep on stepping up and ride it all the way up to the after hours highs. So that's my first thought. Second thought is if it flushes more than 15, 20 cents below 18 and keeps on going and then pops back up and can't get above 18, then I'll look for a little bit of a deeper pullback. I really do think worst case scenario though is close to 17 on this one. I just don't see it filling the gap. Isha. So Isha, its numbers were so freaking bad. I'm sorry, they reported the numbers weren't that bad. They were way down from last year, but the guidance was just horrendous. Here's the daily. And we went through this exercise yesterday on something that was down 70% from the high, AAOI. And this one came out, it was a $25 stock. It went vertical from 40 to 126. Then they hammered it down to 60 and then just trended all the way back down. And it's showing signs kind of bouncing into the 40s. In fact, I think I was long it here. And then it broke down and I just stopped kind of following it. And actually coming into earnings, people got long, so they're trapped. They're kind of fucked. Excuse my French. Oh, so my point was that it's down now. That's the same as the AOI as yesterday, 70% from the high. But we saw AOI yesterday, got hammered right on the open, popped $1, then made a lower low, popped $1, then made a new low. And it's bad. So my thought on this one was I'd actually rather be shorted. Any type of bounce on the open. What I put for resistance? I put 30. Yeah, I was thinking even 37. I'd be shorting it. And I guess the safer short is right here. But you know, I see no reason why I wouldn't be testing 35, and then I would evaluate it from there. Now look, if there's a lot of buying at 35 and it flushes through and gets back above it, play it for a little bounce. But I just think overall, unless people were thinking they were going to just do an awful guide down, this thing should be closing close to the lows. So again, if price action in the first couple hours shows that not to be the case, then that's fine. But the burden is definitely on the buyers at this point. And then I just want to quickly do Momo. So Momo bought someone. Unfortunately, the company they bought is not a US-based equity, or else we could do a risk arbitrage thing. Or I'd be more certain that this would definitely be selling off. It was a stock and a cash deal. Let's just zoom out a little bit. It's already sold off a little bit. So in this situation, when they're buying someone, even if the market likes it, actually scratch that. Doesn't really apply. So you want to look to see the tails in this area here. It's come back from, it's 50% off the low, so it's already, it could definitely spend some time consolidating in this range here. So maybe it fails above 34 right on the open, you play it back down at 32.5, 32, something like that. I would only be thinking about really trading it long if, after 10-10-30 was still holding above 33.5, 34, consolidating and really strong, and then broke to the upside. TTD. So this one's an interesting, let's take a look at the daily on this one. Oh, actually, we don't have to look at the daily. You can see it here on the 30-minute. So they had some bad news. I guess this is probably last quarter's earnings. And it had run up into the earnings from, let's call it 55. And they just crushed it down to 46. Tried to bounce, put in a lower low, and then we got a consolidation. Again, you're going to see this on a lot of charts we look at. Then the market sold off. It put in its bottom when the market sold off. And now with this news, which was very good, it's right back up to kind of where the day that it broke down, and the level it got below where they crushed it, basically. So it is in gap fill territory. That I guess if they really wanted to press it, it could go back up to 59.60 right here. But this could be a tough spot on the open. I'm going to try to go through quickly these last few names to see if we can get to some of the ones you guys put in there. Okay, so initial reaction positive to 52. So the point is, if it fails up here, the first thing is to look for it to pull into 54. And then if it makes a lower high, then look for a pull into 52. I wouldn't say high probability that it's going to go all the way back down where it started from, but certainly, starting to work on this range right here, that's what you want to look at. And then BABA, which I sold some puts into the weakness a couple of weeks ago that obviously expired worthless. Yeah, I was selling the 160s when it was down here. So it's come back to this area, basically, and just extend when we were looking at it when it broke down. So again, if you were looking at it closely based on our prior analysis from a few weeks ago, got back into an area where it was going to have trouble, and it failed there. It came off $4 or so, and now it's kind of building a consolidation range. So I would say if it builds up some more strength in this area here, you could get I still do think it has upside back above 200 at some point this year. So definitely worth watching it. And then below 188, that's danger. And then Aaron put in the stats on OLED into the chat, which is, it does trade 2 million shares a day. It's probably going to have a pretty wide spread, but you can see it already had come off from 200 to 140. So really the question on this one, that is a 30% pullback from the high. We know that this is obviously a very strong technology sector. That's why it was in this uptrend for so long. And really the question is the numbers stabilized enough here? So let's see. They increased their quarterly dividend. I don't know how much they guided down. Oh, and then I guess Samsung is the big thing, right? Samsung is their main customer. It's hard to say. It's obviously, if you look at the longer term, it's below that trend, but I wouldn't call it completely broken yet. That's 350 to 380, so that's 65, 30. It's about an 8% guide down on revenue. It's down 14% right now. It's already off the highs yet. I mean, it's a bounce candidate, I would think. So the first thing, if it does bounce, it's 136 and 140 you want to look at. And then on the downside, it's really where it is right here. Like, it's kind of like right where people were buying it, like me. Basically right here. So on the open, if it does one of these and then does one of these and starts holding here, you see it holding, and then you get a break to the upside. I think you're looking at 140, and then you kind of have to go from there. But you never know. AOI, which I mentioned earlier just briefly. I wasn't on the desk all afternoon, but I mean, clearly after it made the new low, I actually have a script to deal with this situation. Once it took out the low here, the 30-cent low right on this red bar, and then had the green bar, that my script actually gets you long. And then that would have been pretty good. So it went up about $1.40 from there, and would have taken 50% profits on the half an ATR move to here. So pretty good reversal. Let's zoom in. It still has to have a bigger up move. I would say this, first of all. It was an okay bounce, but as long as it's below $28, you can't really think about a larger move. And then remember, this is, when it bounced right on the open, it failed here at 27.50, 27.60. So I would be watching. If it consolidates in this area here this morning and then breaks above 28, it could have a larger move. If it actually pops right on the open and fails at 28, then it'll probably come all the way back down to this area here. Next one is Snap, which one of the Kardashians, she tweeted she doesn't use it anymore, and that's why I got killed yesterday. Obviously, $5 off the highs from post earnings. It's definitely worth. I'm sure some people will be looking to buy it today. If it comes into yesterday's support area low around 1720, 1730, where it really broke out from, even 1750, I'd watch it. I think it probably gets back up to 18 and a half. And then Roku had a very nice bounce off of 40 on the open. All my alerts and scripts went down on the open, so I missed the actual bounce, but I did buy it on this little pullback here into 41. And then caught the move to 44. I did start to look at it to flip it short, but didn't quite get as high as I wanted it to flip it short, so I missed the 2-point pullback here. I would just watch for it to, here, let's zoom out so you can kind of see. So it had bottomed here in the high 30s, then it had supported above 42. I would watch to continue to see if it consolidates for a few days between 42 and 44, just like it did here before this 10-point move, and then play it like that. Good. Got through all that stuff real quickly. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.